Joining us now is CFRA Research Chief Investment Strategist Sam Stovall and Ariel Investments Vice Chairman Charlie Bobrinskoy. Guys, good to see you both. Thanks a lot for joining me here. Sam, it's an interesting spot the market finds itself in, a little bit of a crossroads, right? We had a near bear market or a severe correction. About a month ago, we start rallying. We kind of regained more than half of it. Now, some bear market rallies can be this strong, but maybe not all of them. So how are you thinking about the environment and what the market has told us this week?
Well, you brought up a good point, Mike. Good to see you again, first off. Basically, about 2 out of every 3 bear markets since World War II did have a very strong bear rally and actually got within 2% of the 200-day moving average, as we are right now. Some even went above the 200-day moving average, only to then turn around and set an even lower low. Even if we remain in correction mode, which is 10 to 20%, 42% of those times since World War II, we did end up with a similar reach to the top, only to then end up heading a little bit lower before all was said and done.
And so are you leaning in one direction or another based on, the weight of the evidence so far in the market, Sam?
Well, I bring this up simply because of the possibility that the market could turn around and head lower. But our Lowry Research, which is our technical analysis arm, is indicating an increasing amount of demand relative to supply. And as a result, their belief, which goes along with my thoughts, that the market will continue to work its way higher.
And Charlie, I guess the one reason the market's been able to make up some of this ground, obviously there's some kind of hope for de-escalation on trade, but also the economy, as far as we can measure it, seems like it's steady for now. The Fed this week essentially said they don't see a particular emergency to respond to, either on the risk to growth or inflation right now. How are you reading it, and did this correction surface much opportunity for you?
Steady is an interesting adjective. I'd probably put wobbly. I'd say one-year-old toddler trying to take his first steps. What we're hearing from our portfolio companies is a consumer that doesn't feel great, that's not real optimistic. The job market is okay, but outlook for the economy and inflation are not so great. And we, of course, did have one negative quarter of GDP growth. So I would say we have a market that's trading at above average multiples. Everything except for small cap value is above its 20-year average in terms of PE. And I would call the macro environment below average, higher than normal expectations of inflation. The Fed probably not going lower that we all thought they would 4 months ago. And the economy below average. So I think it's a modestly expensive market without a great outlook.